Hey, Walter here from Naked Forex, and we're going to talk about an interesting question I received from a trader. He was asking about whether or not there are different patterns that you'll see on the lower versus higher time frames. And you've probably noticed if you watch these videos, you probably noticed that I don't typically look at the lower time frames, and I would say anything below 4 hour I would consider lower. So I trade a lot of 8, 12 daily, 2 day, sometimes 4 hour, very, very, very occasionally 1 hour. And the reason for that's pretty obvious. If you've done any testing, you'll probably see this. Here are a couple of things that you'll probably notice when you start trading or moving from, say, like the 15-minute or whatever up to the 4 hour or the daily. One is that the good news is when you're trading lower time. Well, actually, let's just do it. I got Forex tester here, and I've got. Again, you can go to bigprofits.com if you want to watch us use these techniques to grow a small account very quickly. $1,000 account, we're going to grow it up over 300 trades to 100K. That's what we're trying to achieve there. And you can watch along as we do it. But this is the Euro 4-hour chart here. I was going to show you one of the live charts, but I think I've got some back testing going on here. So I'm going to share with you my Forex tester. And as you can see here, the euro has been going up and it's made like a bullish flag here. Typically, this is a good spot to buy, right? And then if you look at the 5-minute, interestingly enough, it's actually a little bit more sideways. Now, when you're trading the lower time frame, what you'll find is that you can get really good reward risk ratio, but typically you have a lower win rate. And the reason for that is very, very simple. The reason for that is because traders often use, like if you use like patterns like I do in support resistance, they'll often use support and resistance that's not like the strongest level. So for example, on this 5-minute chart, I would be really tempted to look at this level down here, right here, and I would look at this level, well, probably this one actually, up here. Yeah. So those are the two that I'd be looking at. Now, if I'm looking at the 4-hour, I'm actually not probably going to do that. If I'm looking at the 4-hour here, I'm going to do something else. I'm going to be looking for a level down here, perhaps, which is way, way, way far away from where we're at right now, and maybe even up here, where we've hit here and there, right? So that's very different. So let's go ahead and just advance the chart here, and you'll see on the 5-minute, it's bouncing around here, kind of respecting this level, but not really. You know, okay, now we've rocketed up on the 5-minute, and you can see over here on the 4-hour, we've gone up. And then on the 5-minute, we go, well, it's going way up. Here, let me zoom in so you can see. Okay, so where are we at here on the 5-minute? What we have here is like a kangaroo tail, and it doesn't have a whole lot of space, right? I mean, right now at this stage, it would be triggered, and it could go down here, and it does. Okay, cool. So it does. So it goes all the way down here to this zone, and the question is, what is it going to do? Is it going to bounce off here or what? Now, if we go to the 4-hour, we actually have a kangaroo tail, which is interesting, and it's right on our zone. So on this, on this 4-hour chart, I might actually put my order here to sell with my stop loss up here. Okay, and then I would put my target down here, for example. Okay, and it's triggered. Okay, and it's on. If I had traded the 5-minute, I might have been able to get on that kangaroo tail up there, especially if I had a zone drawn here. But here's the key: if I'm trading lower time frame, I really want to have a good zone. Otherwise, I'm going to end up with what happened over here, where the market was bouncing off support and resistance, and then just kind of blew through it here, and I think it even did back here as well. Yeah. So, it's not going to be as clean on the lower time frames. If you hook it right, you're going to get a huge reward to risk ratio simply because your stop loss is so close to your entry price. However, and this is a big however, this is often the best case scenario. What you'll typically find is that your brokers will start slipping you when you start making money. And so it's really easy if you're going for really lower time frame targets. So you're going for like 10, 20 pips. It's really easy for your broker to remove 10 to 20% of your profit simply because you trade the lower time frames. So what I found, for example, when I occasionally trade a system called the home run trade on the 1 hour charts, um, I have to go for huge profit on those. And the reason why is the market maker can jiggle you out of your trade or get you into a really poor fill price, and the reason why is because they're just doing little things to kind of work against you once they figure out that you're making money. And usually it takes them about 30 days to figure that out. So, that's something to look out for. So let's see what happens here to this trade anyway. Now I'm curious. Oh, there, it did go down. So in this case, on the 4 hour, it was a very nice, clean kangaroo toe with lots of space. But on the 5 minute, it wasn't that at all. On the 5 minute, it was not very clean. I guess you could make the case for a shoulder, head and shoulder, which means I would have been able to get in here on a sell maybe on this candle right here, this bearish candle, or maybe on this move here, these candles that move down here below this low. And if that were the case, I would have had about 38 pips of risk on this one. And what did I end up having on this one? I actually got in before the candle closed. I didn't realize that I was closed. This one would have had like 96 or 100 pips of risk or something like that. And using the same target, again, if I'm using higher time frame zones and I'm trading lower time frame, that's great. It's only when I wait for the market to get there. And it can be really frustrating if you're watching, for example, the 5 minute charts all day long, waiting for it to get to a significant 4 hour support and resistance level, and it just doesn't do it. Also, you can affect your brain physiology, and I'll link up another video that I did on that in the below this video, so you can watch that one if you want. Basically, it's not good. You want to be using your planning area of your brain. You don't want to be reacting to the market like an addict. And that's typically what we do because of the way we're built when we're trading the lower time frame. So that's another thing. So anyway, I just wanted to point out that all the same patterns work in higher time frames and lower time frames. It's just how you manage them that is important. And you'll often find your win rate goes down in the lower time frames, but you will get a much higher reward risk ratio if you're patient. So I hope this helps. If you want more information on our course, you can go to bigprofitscourse.com. Otherwise, we'll see you in the next video.